Thanks for listening to Mike Douglas, Michigan's retirement coach.
There's a lot of talk right now about Micron Technology, and not just because of the major earnings report it just had and all the stock surging after that, but really because what it may be signaling about the broader AI bubble debate. We're going to get into the weeds a little bit with the micro stuff, but really on a bigger picture, what does it mean with AI as a whole and the economy and the stock market as a whole? So here's what you need to know. Micron is a company that designs and manufactures memory and storage chips that allows computers, phones, and data centers to process their data. Simply put, it builds the infrastructure that keeps AI running smoothly. Think of it like this. If NVIDIA is the GPU engine in a high-performance car, Micron is the fuel system, the lines, the tank, the delivery, all the stuff that happens. Without Micron's high bandwidth memory, AI processors, they can't move data fast enough to process or function, and then the engine stalls. Here's where it picks up. Micron just released its earnings report, and it showed one of the most dramatic earning results ever in the history of the tech sector. Before the report came out in June, it was projected that they were going to earn about 280%. It was going to be the growth in their revenue to $35 billion. But the results were bigger. Micron reported a record revenue, $41.46 billion. That's a 346% increase over the $9 billion they brought in during the same quarter last year. So it really blew out Wall Street's expectations by over 18%. That kind of growth is happening because of the AI boom causing a huge demand for infrastructure, what they build. And memory is one of the biggest bottlenecks. There's not enough companies making products like this. Micron is our biggest American company making these things. And in fact, Micron reported that its entire 2026 supply of high bandwidth memory, it's already sold out. Remember, this is July, and it's sold out of their entire supply for the year. These chips are currently some of the most sought after property in the tech world. Why does this matter for the AI narrative? Well, this is where Micron becomes more than just a semiconductor story. For months, investors have been asking, is this AI boom turning into an AI bubble? And that concern isn't coming out of nowhere. There's been massive spending on AI infrastructure, and it's raised a lot of questions about the long-term ROI of these companies. Some analysts and surveys are showing really rising concern about a potential bubble forming. And others have compared today's environment to that of the late 90s when hype got ahead of reality, the dot-com burst. But Micron's results offer a different signal because unlike the dot-com era, the demand is showing up in real orders, real contracts, and real revenue. Basically, it's a real company making real positive selling chips that everybody needs. The key difference in now versus the dot-com bubble is that during the late 90s, a lot of tech valuations were built on ideas, not operations. Companies had no real revenue, no scalable product, and in many cases, no clear business model. It was just a thought and an idea. We all knew that the internet was going to be big, but nobody knew how to turn it into money. That's not what we're seeing now. Today's AI ecosystem is made up of really profitable companies, massive capital investment, a physical infrastructure like data centers, chips, and power systems, and supply chains that are already under strain. Basically, we're seeing that there is real stuff being bought by real companies and real people to do real things. Micron might be telling us that it sits at a really critical point in the AI supply chain because it doesn't benefit from hype. It benefits from actual build out. People can tell you they want to buy a certain type of car. They can tell you they want to buy a certain type of thing, but are the orders coming in? It's like Shark Tank. The first thing they ask is, what are your sales? Micron has the sales. When we see things like record revenue, sold out supply, long-term contracts, and pricing power, that suggests something really important. Demand for AI infrastructure is not slowing down. It's still accelerating. So while Micron's results don't answer the question of whether or not AI stocks are overvalued, they do give a clearer signal in that when the companies supplying the foundation of AI are putting up numbers like this, it gets harder to argue that is just hype. Of course, as with any investment, there's always risk. Future oversupply could crash prices. Strong earnings may fuel a lot of speculative excess and overvaluation. Sometimes people see this train running and they just say, we all got to get on it. And then too much money flows in and then it has to pull back. The entire AI trade still relies on massive capital spending staying elevated. So as long as money is still flowing into AI, there will be more things being built, more data centers, more need for Micron and more physical chips. That's a good thing. Some things we want to look out for or just keep in mind is this: follow earnings, not hype. Right now, earnings are backing the AI trade. Number two, watch supply signals closely. When memory supply catches up, margins could fall fast. If there's not this back order and they haven't sold out, what if they're just meeting orders currently? Well, now, if things change, they don't have the supply chain set up. So just be aware of that. As long as they have a back order, that means there's business good for a long time. Number three, be careful chasing parabolic stocks. Even great fundamentals can't protect against overvaluation forever. When stocks sprint up, sometimes they sprint back down. So when something goes up really fast, it may be time to hold out and just wait for it to land at the right place. Now, we should say this: I have no relationship with Micron. I have no relationship with AI companies directly. I'm a financial advisor. I work with clients preparing them for retirement or helping them through retirement. However, when you're dealing with tech companies in the stock market and a wide range of possibilities, one of the most important things you can do is weigh the cons and weigh the pros and see what makes sense for people at this phase of life. Because if you're near or in retirement, it's important to have the right balance for your own risk tolerance. If you need to learn how tech investments may or may not work in your plan, we can help. Reach out to us. Go to our website, michigansretirementcoach.com, or click on the links we have posted here.
Thanks for listening to Michigan's Retirement Coach with Mike Douglas. To learn more, visit michigansretirementcoach.com.
Michael Douglas is an investment advisor representative of Stewards Wealth Planning, LLC, a registered investment advisor. Financial professionals are not licensed in all 50 states. To find out if Michael Douglas is licensed in your state, please call 517-323-7526. Stewards Wealth Planning, LLC is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Michael B. Douglas, NPN number 9650939.